Hello and welcome to the Good, Bad, and Ugly weekly review of 5th of January. We started the new year with a bang, but first let's take a look at all the stories and the content that we created this week. Um, there was a story about the forecasting that has failed in the past, how momentum strategies help you outperform versus the underlying index. Extremely important story, this one. Will small caps continue to perform? A good analysis here. A story on how the gold setup is extremely positive right now. How US market levels are dictating Indian markets. Some behavioral bias related analysis on how we become our own speed breakers to our own returns. Within small caps, how you're doing it and how you can improve your small cap investing. Some analogy from the auto industry in terms of how trends are forming. Uh, some tips on how to make your investing simple. There were a couple of tips there, and a lot of general macro about the money base going up and are we living in a matrix. Very interesting stories, all of them. Um, Another very interesting thing that we did in the weekend investing app was ask this question, have a poll. What is your home loan EMI as percentage of your in hand income? And we got 56.7% responses of 0 to 20%. So, hats off to these folks because that is the ideal percentage range in which your loan EMI, home loan EMI, should be of your take home income. 23.8% have slipped into this next bracket of 20 to 40%. I'm sure uh, these folks can try to come back into this range, maybe by adding more, try to add more sources of income here, or or reducing what is the outstanding loans, because 20 to 40% is a bit steep. And then of course 40 to 60 and 60% are totally no nos. I think you are overstretching yourself by a very wide margin, and this is definitely not advisable. So a lot of folks, 277 folks, responded to this, and there was a lot of interesting uh, anecdotes and stories that people shared with us, and the the most common element that was coming out was that things are getting very expensive, and this is world over. We had examples from London, from Bangalore, from other places. Things are getting expensive. Wages are not keeping up with the inflation, with the house asset inflation, and the sooner you are able to do this, the better. Uh, so go through this. We'll have, of course, this presentation available to you and all these responses, and you can also think about your own situation, how to find that right balance between what you are uh, spending as percentage of your disposable income. All this is available on the app, so please download the app and use that. So coming back to the markets, so Nifty, after a blockbuster week leading to the new year, this week has remained flattish. We are kind of gaining time here. Some consolidation is happening, but that consolidation is happening very near the all-time highs. So, in terms of the levels, there are no worries. On the weekly chart, you can see after 9 weeks, or in the last 10 weeks, we've had just two red weeks, and that too, marginally below the previous week. So, the rally is very much on. It is very strong. I mean, if you see the previous rallies, you will see significant down days. But here we're not even getting significant week down days, week down weeks, which suggests that, I mean, my own speculation, if I have to do, I think we are heading towards 24, 25,000, and that too by possibly by May. So I think another 10% can come, and this disbelief can continue. Markets always climb on walls of worry and lumpy returns, where at times it will become hilarious in terms of what market is doing, and people will back off, saying that valuations don't support this. Well, valuations were not supporting even at 19,000. I mean, if you look at historical valuation metrics, they were not supporting even at 19,000. Now we are at near 22. So you can't explain everything by valuation basically, and you have to respect the liquidity that comes in the market and that is driving the market. Benchmark overview: Nifty was flat. CNX 200 moved up 0.6%. CNX 500 was up 0.8%. Nifty Next 50 very nicely up 1.8% this week. And small caps and mid caps have again uh, taken the lead at 2.4 and 2.5%. For the financial 24, small caps remain 63.7% up, mid and small caps 57.4%. So fantastic returns. And again, I can just keep repeating myself, but lumpy returns are a part of the market's nature. If you get frustrated in 1 year, 1.5 years, 2 years that no returns are coming, and you get out of the market, the third year will be the year which will make up for all those 2 years. So this is, we have seen it so many times. You need to stay invested, and you need to have that confidence that things will happen. Weekend investing strategies. Oh my God, MIATH2 has blasted this week, 7.6% on this counter. MIMT all cap up 4.4%. Both these strategies are up nearly 70% for financial year, and they're not even small cap oriented. MI20 is up 3.2%. HNI Wealth Builder is up 3%. Oh, MI20 has crossed 101% for this financial year. So, three cheers for MI20 subscribers. You've really done well in selecting this strategy as your strategy, and I'm amazed at the performance MI20 has given. I mean, if you had asked me 9 months back what would MI20 will return, I would not have dreamed that 101% would have been possible. So amazing performance. Uh, HNI Wealth Builder is up 76.4%. MI25, MI35 both up nearly 3%. MI25 is up 64.7%. MI35, 85.4%. This, I think, is a very underrated strategy of weekend investing. Not very many people have noticed it. Not very many people have subscribed to it. This is as good as MI20 in many ways, and possibly more focused towards, of course, it is more focused towards small caps. MIATH also up 2.3% at 34.6% for the financial. MI Evergreen, MI30, and NF10 all up more than 2%. They are also up decently above 50 to 60% for the year. MI India top 10 was at 0.7%, beating the Nifty. And for financial, it is at 39.6%. So, where was Nifty for the financial year? 25.1%. So, it has really done well this year, clocking 39.6%, a 14% plus gain over its benchmark. NG 50/50 was down 0.5%, Nifty was down, and gold wasn't going up. But it is achieving its purpose of a double digit return this year. Real estate 7.8% this week. This sector is going bonkers. 118% for the financial year. I mean, if you did not have real estate in mind this year, I mean, you've missed a major trend. Unfortunately, there are not too many stocks, too many liquid stocks that are there in the real estate, and not so many in the top indices. So, from that perspective, it remains a very stock pickers, low market cap kind of game, most of them. Some of them, of course, are large caps, the bigger names. Pharma up very nicely at 3%, up 44% for the year. Public sector enterprise, energy stocks, PSU banks also up 2%. What was failing this week was IT on the back of NASDAQ fall. Metals at 1.3% on back of Chinese markets falling. Autos just correcting, I suppose, and many other sectors just in limbo. But overall, if we see, I mean, no sector is in red for the financial year, and most of them are in very high double digit region. In terms of sectoral momentum, real estate remains number one across all the frequencies that we track. Public sector enterprise stocks right up there. Pharma is making a huge comeback. FMCG is making a comeback. Uh, then consumption stocks, auto stocks are also making a comeback in the last few weeks. What is slipping is infra and commodities have slipped. Energy has slipped a little bit. But overall, I would say these three or four, five sectors are really the ones which are doing well. Financial services and banks have not performed well. IT has not done well, and media is also down, right down there. So spotlight this week is on MI NNF 10. I think NNF 10 is the second most uh, liked strategy in the weekend investing basket. This is the performance of NNF 10 since we went live in November 2020. So we've completed 3 years and a month on, 3 years and nearly 2 months on this strategy. And the strategy has done reasonably well for a large cap strategy. 100 rupees is now 225 versus 187 on the Nifty Junior. Uh, the If you look at the internals in this strategy, total trades over this period have been 96 transactions. If we see the 96 transactions over 2 years and 2 months, uh, uh, sorry, 3 years, 3 years and 2 months, you'll see that the average churn is between 2 to 3x per year. Of that, gainers were 56%. 56% of the times when we bought a stock, we made money. 43% of the time when we bought a stock, we lost money. So you may say, they are pretty much equal in terms of gaining and losing. But the catch is that every time we won, the average gain was 33% on that transaction. And every time we lost only 9%. So that is the casino math, the magic that happens uh, in momentum investing is that you let your winners run and you cut your losers early. The biggest winner was 285% up, and the biggest winner, sorry, and the biggest loser was 36.8%. What one big Adani Transmission, Adani Enterprise, Hindustan Aeronautics, Bank of Baroda, LTI, VBL were the biggest winners in this 3 year period. And biggest losers were also ATGL, Adani Green, Mindtree, PEL, McDowell's, and Vedanta. You can see the biggest losers are in double digits, high double digits, but the biggest winners are in triple digits, more or less. So that is what is creating the difference. It's a 10 stock rotational strategy, rebalances on a monthly basis. First of every month, it rebalances. Very, very peaceful way of investing. Just one click every month, and you are sorted. Recommended capital is 5 lakhs to 30 lakhs, and outlook is 4 to 5 years. Subscription fees is right here. So you can use this code NY24 to avail a 20% discount. This is valid till 10th of January. We are running this campaign for the New Year's, and this New Year campaign is available to you as well for the next few days. Thank you so much for watching this GBU. I hope you've downloaded the Weekend Investing app. You are interacting in the community there. We are very much available on Twitter also, and on the support is available on the app, in the on email, and also on the website. We have a chat bot there where you could drop in a question. So everywhere, the support in every forum is available. Please use it. Don't remain in any doubt about anything, about procedures, about operations, about products. Just you have to just ask, and we'll take care of it. Thanks. Bye.